Today I brought you a new strategy which uses moving averages and the stochastic oscillator. This video is for educational purposes only and does not constitute financial advice. Let me kindly ask you to like and subscribe. Let's set up the environment. Set time frame to 15 seconds and choose Heiken Ashi as chart type. Among indicators, I choose stochastic oscillator and moving average 3 times. Set the period of the first moving average to 7 and set the type to exponential. I leave the color as green and set thickness to 4 pixel. Set the period for the second one to 50 and set its type to exponential 2. I set the color to yellow and thickness to 4 pixel as before. For the last moving average, set the period to 200 and its type should be exponential as well. Set the color to white and make the line thick as this indicator will be in our focus. For stochastic oscillator, set K period to 7, D period to 1, and smoothing to 2. I set thickness of all 4 lines of the indicator to 3 pixels. And set color of D period to something vibrant. Set the levels to 75 and 25, and set their color to green and red respectively. Set trade duration to 1 minute with free expiration mode. Choose trading pairs with competitive payout. Everything is set up, so I start looking for trade entries. A setup might form here. I wait until a candle closes below the 200 period moving average. There was a recent cross of the other moving averages. The green one crossed below yellow. Stochastic is below the 25 level for a while. These confluences support our signal. Wait for this candle to finish. Candle confirms the signal. So I'm placing a sell here. You should always wait for candles to close, so they fully confirm the setup you are looking for. It might seem there was a recent support level that price either breaks through or bounces back. But be aware that we are using Heiken Ashi candles. This is a useful chart type. It is averaging and smoothing out movements, so we can spot trends. But at the same time, these are not reflecting price action closely due to their formula. This also means some signal in the past that played out well might seem failing on Heiken Ashi, while on real price data it is clearly visible it was winning, or vice versa. If you are wondering which platform I am using, you can find the link in the video description. My first trade finished successfully. I'm looking for the next entry. This seems like a good potential bullish setup. Stochastic oscillator has already crossed sharply above 75 level, which is even a stronger sign than hugging the line for a while. Price may soon cross above the 200 moving average, and green might cross above yellow during the next few candles. But there is an important market context consideration. There were multiple doji-ish candles in the recent past in the possible entry zone. Therefore, I consider this a risky signal and skip waiting for it. This is another potential bearish setup. Stochastic is already crossing below the 25 level. Current candles seem to close below the 200 moving average. If the green 7 period moving average does not cross below 50 period yellow, I will skip the signal. Candle closed below 200, meanwhile green crossed yellow, so I placed a sell. You might say there were similar doji-ish candles in the entry zone in this case too, but their consolidation was already broken with the latest big bullish move, so we can ignore them this time. Understanding market context is crucial for trading. While waiting for this trade to finish, there is just enough time to press the like button. Consider subscribing to the channel so you won't miss upcoming content. Just a few clicks for you, but help supporting my channel. Thank you very much. The trade closed. Look for the next. This is a potential bullish case. Green line crossed yellow recently. Stochastic is already hugging the 75 level for a while. If a candle closes above the 200 moving average, I will place a buy. Candle closed above, so I placed the buy. The green 7 period moving average touching the 200 is a nice extra confluence, but it is not required for the strategy. Regardless of the outcome, this will be my final trade today. When trading short-term trades, I keep my trading sessions as short as possible. Trading carries high risk and can be stressful. Longer sessions may sometimes lead to more profit, but they also increase risk and stress. The trade finished positively. This was my last trade today. Feel free to share your thoughts in the comment section. Thank you very much for watching my video. See you next time.